Hello everyone, welcome back to my channel. If you're new here, welcome, and make sure to subscribe so you don't miss out on any new content I put out. There's tons of videos organized on all my playlists, as well as in my video description there's links to some of my most popular price action, volume profile, and order flow videos as well. This video I'm going to dedicate to one of, for me, the most important price action patterns that every price action trader should know of. This is the base diagrams of it. I'm going to go over describing what the pattern is, all the elements of it, what it all means, and then we're going to go into 4 different charts and just look at examples of this patterns playing out. This can be seen on all different markets, all different time frames. So this is a very efficient pattern to identify market reversals, either at swing highs or swing lows, where trends might be coming to an end and reversing. And if this looks familiar to you, you know, this pattern has, I've seen it referred to by many different names on on YouTube, on Twitter, on different websites, etc. If you follow traders, for example, like ICT, this is what they would call a breaker. Other people call it a broken base. Other people call it sweeps. You know, it has many different names, but basically it's all the same. What we're looking is for a low to form and then a shift in market structure where we have a break from a previous swing level, and then we're just looking to get in once we identify that market structure break. Okay, so the pattern, these ones are exactly the same, they're just reversed. The long setup we would use to identify swing lows, so a change from a downtrend into an uptrend, and the short setup, the reverse, will be at the top of trends where we identify a swing high forming, and then we will be looking for opportunities to get short in the market. Now, one thing that is important with this as well is, you know, you want to identify these levels at important areas of support and resistance, and you want to be using also multiple time frame analysis. So you might identify that a swing lower high has been swept on a higher time frame, and so you can drill down into a lower time frame to identify more precise entries, etc. So in this video I'm going to show you just how to identify this pattern, and then how you would trade this, where you would be looking to get in, where will your stop loss go, etc. Which actually I am missing this right here. Okay, so let's talk about this from the long setup first. So what you want to see is a downtrend coming down. We have a swing low, then we have a lower high, then we come in and we spike underneath this previous swing low and close back above. Now, usually what we're going to see here is just a wick and a close back above, because if we go here and we have a solid candle through this, well, for me, this is basically a sign of continuation, because we're just making a new lower low, and then I think that the trend is just gonna continue downward. So for the pattern to be effective, what we need to identify is just a quick move below a swing low and a close above. And then the next part of this, so the first step is identifying the sweep of this low in this case. Second step is we want to see market reverse and break above the previous high that broke or that initiated the sweep. So we look for the swing high here, and then once we identify a candle on the time frame that we are tracking here on the macro, the main higher time frame where we're looking for the setup, once we have a solid close through this previous swing high, then we say that market structure has been broken right here, because like I said, if this was exhibiting just a downtrend behavior, we would have continuous lower lows, lower highs. However, what we have here is we came up, and instead of making a new lower low and lower high, we've come and broke above this. So we've essentially changed or broken the downtrend dynamic. So once we identify a close through this level and a market break, then now we are scouting for long setups. And the nice thing about this pattern is that your invalidation, your stop loss is going to go underneath the sweep of this low, okay? So you have a very clear point where your trade idea would be invalid. And so right here, there's two different types of entries you can take. You can either buy here on the confirmation close through this high where the market structure is broken, or you can wait for a possible retest back into this area where we had the breakout from this high, and then look for an entry right here in this area, or a retest of this broken swing level. Okay, now if we're waiting for a pullback, that is going to be favorable because we're going to get a tighter risk to reward. What do we mean by that? Well, if I grab my where is the tool? Right here, like the long position tool. Let's say if we take our entry right here on the candle close that confirms the break in structure, and we have our stop here, you can see that, let's say our take profit is somewhere like, up here. Let's say it's a 2-to-1 trade. You can see that our entry was right here on the candle close confirmation. However, if we wait for a retest, then we could potentially raise our risk reward a lot more, because now we're waiting for market to pull back into this level before we get in with the same invalidation. Okay, so just depends on the market conditions and how the setup looks. But you can either, like I said, you pull the trigger on the confirmation of the break of structure, or you wait for a pullback. And then the short setup is going to be exactly the same thing in reverse. We're going to have a uptrend, a swing high, a higher high, a higher low. Market then pushes up above this high and then just comes back down. So in other words, we make a sweep of this high, we just leave a wick through that level and close back below. And then once market comes and we have a confirmed close through this previous low, the low of the candle or series of candles that broke and caused this sweep, then this is our entry trigger with a stop loss just beyond the sweep, the wick of the sweep. And then we either get in on the candle close confirmation, or we wait for a backwards retest of the broken swing area right here for our short entry. Okay, so let's go into the examples. We're going to go over 4 different examples. First one is in the S&P 500 market. This is a 4-hour chart, and as you can see, we had a swing high, swing low, and then we're making just higher highs and lows up here. And then right on this, we have this impulsive breakout where we start making new higher highs, higher lows. We did leave this inefficient move here, which I'm going to talk more about this later, because obviously if we get into a trade not only do we need to know where to get in and when to put our stop, but we need to have a plan of where we're going to take profits. Because if we're going to take a trade where, the risk to reward is 1-to-1, that's not very favorable. We need to look for a setup that is going to give us a decent risk reward. So in this case, you can see that ultimately the second target, this would give us a nice 2-to-1 trade, more or less. So let's go over the elements of the trade. You can see that we're coming up here, making continuous higher highs, higher lows. And then right here, there's 2 green candles. We have a candle that wicks up right here, sweeps this high, and closes back inside. And then after that, we can see that we have a strong bearish candle down. We still have not broken structure, because you can see here we just wick below this, but we have not broken down. So for now, we're watching this support level. You can see this held for several days at these levels. We had a push up here, and then we come down, and finally right here on this candle, we have a confirmed break below this important support level. Okay, so according to the system, then we will look to enter the trade right over here. Our stop loss would go just beyond the sweep right here. However, in this case, we've already made some structures below. So if you want to be a little bit more aggressive with your stop, we could put it just beyond the previous swing high that led to the break in market structure here. And then you can see first target for me, immediately my sights go over to this swing level, which we broke through and we have not retested yet. So this will be my first area to take profit. And then beyond that, we have the inefficient move in this common gap. We have all these resistance levels which we broke through and we've not retested. And then you can see ultimately here, this will be for me where I will be looking to close the entire position. Okay, and if we go into the 1 hour time frame, we can see this in more detail. Sometimes it helps to go, like I said, into a lower time frame just to refine the levels. So we can see right here, let me just zoom in. We had the level that was swept. You can see on this 1 hour time frame, this candle barely closed through this high, but then we quickly came back below. And as you can see on the hourly time frame, we did close below the swing low right here. So on the hourly time frame, the market structure break occurred right here. So if you had drilled down into this level, you could have entered right here. You can see you would have been squeezed a little bit, but in this case, we would have our stop right here. And then once we come down here and have a confirmed close again below this level, like we saw in the 4 hour time frame, then we could move our stop to the next logical level of protection, which will be just beyond this lower high that we've just printed over here. And then again, first take profit would be at this swing level here. And the ultimate take profit for me would be on a fill of this move into this next broken swing level right here. Okay, so that was the example on the S&P 500. Let's go into the gold market and let's go into the daily chart. Okay, in this case we can see just another example right here. So we have uptrend right here. You can see just making higher lows, making higher and higher swing highs. And then right here, this candle is a very bearish candle, this big pin bar where we come above this swing high, close back below, and then next candle we get a bearish candle right here. Market comes down. Over here, you can see that we had a very clear level of support that held for several days before we had this impulsive move that made the sweep. So for me, this is the key area that we need to break, because this whole structure here, it's what's holding our bullish argument when we cause this move up. Because as you can see, we did come down here, but the market was holding here. So potentially we could have been making a higher low and then just broken back above here and continued up. Okay, so the first sign of trouble was this candle right here, which broke this intermediate swing low. But like I said, we want to identify once the low, in this case, that led to the candles that made the sweep is broken, which as you can see happened right here. So again, once you see this happening, you have two options. You can either get in right on the candle close here. Our protection will be just beyond the sweep level right here, or you could wait for a retracement. In this case, this is a very, very clear level, broken resistance. We expect tested underneath to become support. So our entry could have been right here, which would have given us a better risk reward on this trade. And then you can see we come down, we break again, structure to the downside. So we went from making higher highs and lows to now making lower lows and lower highs. And you can see we come down again and reject this level a second time here on a retest. And then for me, ultimately, what will be the most clear take profit level? Well, we have a gap here. We have a broken swing level that has not been retested right here. And you can see how this came down and tested right into the tick, okay? And obviously the stop loss, you know, if we're like over here on the trade, you don't want to keep your stop loss right here if you're already at this area of profit with your TP right here, because right now the risk to reward does not make sense to risk this. So in this case, once I've identified this area right here as a strong resistance, then I move my stop from here down to here. I tighten my risk, and then we can see that we keep our take profit right here. Okay, so that's another example. And then you could have also drilled in. I want to show you how, if you go into lower time frames, this can help you to identify and manage your trade even better. You can see on the 4-hour time frame, same thing. We have our sweep. We actually came and retested it here. We come down. This was our main structural break that we were looking at on the daily. But like I talked about before, you can see this in more detail. Let me zoom in on the 4-hour. This is the level we were talking about, how we made an intermediate double bottom here, another level of support that we break down here. And then right here was the confirmed break from this level, okay? And so here, I said we could get in on the candle close or on a backwards retest right here of the level. We do see right here on the 4-hour, there's a risk that this could have come all the way up here before we rejected. So, in this case, the stop, we could have put it just beyond this swing highs, because we know we could get a pullback up into this area. So this would have let us tighten in our stop. And in this case, you know, if we put a short position, let's say we got in on a retracement here, our stop right here, and our take profit would have been there. You can see this is a 2.3 to 1 trade, which is a nice you know, a good risk reward. But then again, you know, once we come back here and retest this twice and reject, we could have moved our stop loss down beyond this level, and then that would have even made our risk reward in this case, even more. We would have reduced our risk even more, and then we just let the trade play out, keeping our stop loss now in this level once we continue to break down. So we can see how also we're actively managing the trade using the lower time frames to help us. Originally the stop was here, then we can see from the lower time frame we could move it here. Once we have a confirmed rejection of this, we can move it down here, and once we start breaking down further, then we can move it over here. We just continue tightening our stop just to minimize our risk. You could also scale out of the position and just take some of the position off, etc. Let's go now into crypto and look at an example on Ethereum US dollar on the 1 hour time frame. This is a long example, so in this case this is how we would identify a sweep of a low and how we identify a trend reversal. So in this case you can see we spend many days in this very tight trading range. We had a huge down candle, most likely due to some news event, probably something to do with the ETFs, which has been sort of the big topic lately on crypto that has caused most of the volatility. We broke this level of support, so now this makes a very obvious take profit level in the future, and you can see how we come. Market puts in a low, we come back a little bit, and then right here on this pin bar we just sweep below this level and close back above. Then we come up here and then we make this impulsive move that breaks this resistance to the upside. So now if we drill down into a lower time frame, let's go into a 5-minute chart to look at this in great detail. Okay, so here, sorry, on a 15-minute time frame, let's look at this on a 15-minute. Usually when you're doing multiple time frame analysis, there's sort of a rule of thumb you can go by, which is you want to move in 4 to 6 unit increments. So what does that mean? That means if I'm looking at a daily chart, then I want to drill down to around a 4-hour chart, because you know that 4 times 6 equals 24 hours. So you want to go between a 4 and a 6 increment, because if you're on a daily chart, you don't want to drill down into a 15-minute. There's just too much of a difference here. So you want to drill down into 4 to 6 multipliers. If I'm on a 1-hour time frame, then I probably want to go into like a 15-minute, maybe a 5-minute, and so on. If I'm looking at a 4-hour chart, then I want to drill down into a 1 hour, etc. So in this case we were in a 1 hour, now we're in a 15-minute chart. And you can see right here, again, let's go over all the steps of what happened on this scenario. We had the very impulsive move. We had the low here, and again, these moves are very dangerous to trade, because you have people that are either chasing this trade, trying to like short right here at the low, and then they get squeezed, or you have people that are trying to long all the way down on this move and just getting completely liquidated, because you cannot predict where the market is going to stop. So if you wait for one of these patterns like we're talking about, this is going to give you some clues as to where you can expect some kind of trend reversal, or at least a short-term reversal on this. So in this case, we had a sweep of this important swing low right here. Then we can see we had a micro trend line here, which was broken to the upside. So once we have this candle close through here, this marks our structure break to the upside. We have our clear invalidation or stop loss below the sweep. And so now we have the two scenarios here. We could either go long right on the break here with our stop here, or we can wait for this level to get retested, which you can see happened on this quick wick here. Now, this gives us a little bit better risk reward entries, but you also run the risk that if this doesn't pull back, you're just not going to get filled and you're going to be left behind. So that's the risk you take if you want to be a little bit more conservative and wait for a backwards retest. It's that you might not get it. Okay, in this case we did get a perfect retest here, and then you can see once we just broke out from here, we have another trend line break right here that you could have been tracking here. Once we broke through this trend line, then this stop can be moved below this wick right here, and then very obvious take profit here at this huge level of support that's broken, and we now expect some kind of resistance here. Okay, and finally let's go into a Forex example, Euro US dollar, and we're going to go into the daily chart. We're going to look at a daily and a 4-hour time frame on this. Oh, I'm on the wrong one. Okay, right here, Euro US dollar, and we have our example here. Okay, so in this case you can see this trade, we actually did not have a So right here, in this case, on the daily chart, you can see that we got a candle close through the high, but then we immediately went down. If we see this, for example, on a, let me mark all these things, and if we enable this on a 3-day time frame, you know, you can see that, for example, on a 3-day time frame, you can clearly see a sweep here. However, you know, obviously, if you just keep switching and switching time frames, there's going to be some kind of time frame where you're going to find this to be just a wick. I don't really use the 3-day time frame, but I just wanted to show you how the perspective is different. But the main thing is, like I said, these trades, you want to identify them at an important level. In this case, you can see where we're coming up with a very strong uptrend. Right here, we have this impulsive move up that broke this swing high. So we have this bullish demand zone, this bullish order block. And then right here, this whole gray area is a big daily area of supply. So this is an area where I would expect rejection. So when we come up here, this is the area where I want to be focusing on to identify this type of pattern, just to signal some kind of move to the downside. Okay, so we have identified the supply area, and we have identified a very clear area of support from this bullish order block. There's two areas actually here. There's this broken resistance, and then we have the order block down here in this fill of this gap right here. Okay, so once we look into the trade ideas, these are my two areas of take profits. Okay, but so if we drill down into the daily, you can see that we had this resistance area break above into supply, and we come and close back below this level. So let's drill down into a lower time frame, which is where we would go to identify how we could get in on this trade. So in this case, you can see that on the 4-hour time frame, we're looking at whole candles here. So this is not necessarily just a wick through this level, but this is basically a failed breakout into a big area of resistance on the macro time frame, and then we just accept back below into this level. So in this case, we have resistance, market breaks above, we fail and get back below this level, and then this was the swing low, or the series of candles that led to this false breakout into the macro resistance. So once we come and close back below this level, now I see that structure has shifted to the downside. You can see we broke basically through this whole area of support, was also broken to the downside. So in this case, we can either get in right here on the candle that broke below this low that led to this sweep, or and our stop would go beyond here. But in this case, we can see that we did break below and retested here and rejected, which was originally the resistance area here. We could put our stop here, which would let us have a tighter risk reward. And then in this case, we could either enter right here or on a test back of this level, which, as you can see, we pull back, test this area. We barely missed it right here, but we test this back over here, and then we start going down. And then again, this is the macro demand block that I was talking about, and we would have hit our take profit here. So I know the risk reward on this was not huge, but I just wanted to show you a trade in here, a trade idea, which even though it does not look as obvious as the other ones, we still have the same element ideas where we have a important swing or resistance area that is broken and failed into a macro resistance in this case. Then we break down and break market structure to the downside, and that's where we identify, okay, this market looks to be turning and due for at least some downside into our next obvious target. And then you can see we come down, and this swing levels, the swings that led to the sweeps often get retested, and this would be our optimal entry areas to look for our opportunities then. Okay, that's pretty much it for the video. Thank you all for tuning in. Hope you have enjoyed it. And again, this is a must know pattern when it comes to price action trading, in my opinion. I recommend you go into your charts, you look at your favorite markets and time frames, and just back test this, annotate your charts, and just learn to identify this pattern for future use in your trading strategies. Okay, take care, and I hope you have a great week, and I'll see you in the next one.